Hello dear students, welcome to Devika's Commerce and Management Academy. Today in liquidation chapter we'll work out one problem where you have to write the journal entries in the books of transferor and transferee both. If you understand this problem maximum you can go ahead. So the problem is given on the desktop, you can note down or you can take a screenshot. Okay, I'll explain the problem first, then after that we can go ahead. So the problem is given X limited is absorbed by Y limited. X limited is absorbed by Y limited. It means X limited is transferor. Y limited is absorbing. So Y limited is here transferee. Given you the following balance sheet. Given you are the balance sheets of two companies as on 31st March 1988. What is given to us? Assets, sundry assets, cash in hand only. And liabilities, authorized capital. Authorized capital 9,000 equity shares, 150 each. This is for the X limited. And 60,000 equity shares at the rate of 75 rupees. That is 45 lakh for the Y company. After authorized share capital, they have given us paid up share capital. Whenever authorized share capital is given, don't touch it. We have nothing to do with this or authorized share capital because they are authorized to issue so many shares. Okay, but paid up share, how much shares they got it, this is important. How much shares they got? 9,000 equity shares at the rate of 135 rupees paid up. So this is important. Authorized is ignore it. So 9,000 equity shares at the rate of 135, it is for the X company, and 40,000 equity shares at the rate of 75 rupees, this is for the Y company. It means 9,000 authorized shares, 9,000 they have issued. For the Y company, 60,000 authorized shares, but they have issued 40,000 only. It means the rest of the 20,000 equity shares they can issue at any time. It's just information, right? So authorized capital don't touch, ignore it. And next, general reserve, profit and loss account, and sundry creditors. Three more amounts are given apart from the paid up share capital. Okay. Now coming to the adjustments. The holders of every 3 shares in X Limited was to receive 5 shares in Y Limited. The holders of please be careful this point. The holders of every 3 shares in X Limited. X Limited is who is this X Limited? Vendor. Okay, transferor. So they are eligible to receive 5 shares in Y Limited. For every 3 shares, Y Limited is giving 5 shares. So this is related to the purchase consideration. Okay. Pass the necessary journal entries in the books of both the companies and the balance sheet of Y Limited after absorption. The amalgamation is in the nature of merger. In the nature of merger. So this is related to the transferee. In the books of transferor, it doesn't make any difference, whatever may be the method. That may, but whenever they are saying merger means this is related to the only transferee. In the books of transferee, you need to be careful while passing the one entry, that is assets and liabilities are taken over. Difference. Where do you write the difference, whether it comes on the debit side or credit side? What do you say? It is general reserve because it is merger. Right, only this point you have to remember, rest of the problem is normal. Now coming to the problem, in this problem purchase consideration is not given. We have to calculate first purchase consideration. Purchase consideration, how do you calculate? We can show it in the working notes here. The problem is very lengthy, so I have written like this. Calculation of purchase consideration. Purchase consideration, in the adjustments they said the holders of every 3 shares in X Limited was to receive 5 shares in Y Limited. So calculation of purchase for every 3 shares in X Limited, Y Limited issuing 5 shares. Right. So total how many shares are there for the X Limited? X Limited is having total 9,000 shares. Right. 9,000 shares. For 9,000 shares of X Limited, what is the value? What is the amount is going to pay by the Y company limited? That you have to calculate. So for 9,000 how much? It means 9,000 into 5 by 2. 9,000 to 5 by 2, it is coming to 15,000 shares. Means Y company is going to pay 15,000 shares. So I have written here, hence Y company issues 15,000 shares at the rate of how much? Y company capital is here 75 rupees per share, right? So 15,000 at the rate of 75, it comes to 11,25,000 is the purchase consideration. Am I clear about the purchase consideration? Very important point. This is clear. Okay. Now next we'll pass the journal entries in the books of transferor, then after the transferee. First, journal entries in the books of X Limited. Who is he? Transferor. So first entry comes to all the assets we have to transfer to the realization account. In the books of transferor, always we have to transfer assets and liabilities to the realization account. Okay, so here we have assets of sundry assets and cash in hand. Where do you transfer realization account? Debit side. Okay, so realization account attached to sundry assets account to cash account. Sundry assets are 16,85,000 and cash is 3,500. Together it comes to 16,88,500. Being assets and various assets transferred to realization account. Then after that we'll transfer the liabilities. What are the liabilities? External liabilities. External liabilities we have only creditors. So assets debit side, liabilities credit side. So creditors account debtors under creditors account debtor to realization account. How much is the creditors amount? 55,000. We have to see the X Limited company only, X Limited assets which are given, not Y Limited, because we have to wind up X Limited, then it will be taken over by the Y Limited. For winding up purpose point of view, we are seeing the X Limited amounts only, not Y. Don't touch Y. Y amounts comes in the balance sheet. Okay. Now creditors amount is 55,000 of X Limited. So this is being liabilities transferred to realization account. Then after that, third entry comes to purchase consideration due. Purchase consideration due. Whenever due is there, the entry is Y Limited, means purchaser account attached to realization account. So how much is the purchase consideration? We have calculated just now. 11,25,000 you got. Okay. So 11,25,000 we have written. This is given in the working notes. I have shown working notes, it is given. Being purchase consideration due. Okay. Next, this third entry is due. Next we have to pay. When we have to pay, that comes to the next entry only. So how we are paying? We are paying through the shares. Through the shares. Okay. Debit what comes in? What are we getting? Shares we are getting. So we are writing on the debit side equity shares in Y Limited company account debtor to Y Limited. From where we are getting? From Y Limited. We are saying equity shares we are getting. Debit what comes in? Credit the giver. Giver is here Y Limited. So this purchase consideration when we are receiving, for receiving purchase being the purchase consideration received. This is the narration. Okay. If this is over, next we have some liabilities that is also to be transferred. What are those liabilities? General reserve, profit and loss account. Okay. And what else is there? Equity share capital also. Equity share capital of 12,1500. 12,15,000. 12,15,000 general reserve, profit and loss account. All these things are we are transferring to the equity shareholders. Okay, for that we have passed one entry. Equity shareholders account debtor, profit and loss account, general reserve to equity shareholders account. 3 amounts we have transferred. Okay, next after that we have to close the, after writing these 5 entries we have to close the, or we have to open the first realization account. There we are going to get profit or loss. After writing 5 entries, 1, 2, 3, 4, 5. 5 entries we have written. After this what we have to do? Realization account we have to open. Realization account is opened. Wherever you are finding realization, that amount is to be transferred to the realization account. Now first entry, realization is debited. So debit side we have written Sundry assets and cash. Sundry assets 16,85,000 and cash 3,500. This is over. Next we have realization on the credit side. So credit side we are writing by sundry creditors 55,000. Next third entry also we have realization. Which side? Credit side. So credit side we are writing by Y Limited 11,25,000. This one. Anywhere you are finding up to here? No. Okay, so we have only three entries. Debit side 2 entries and credit side 2 entries. Debit side these two, credit side these two. Okay, so 1, 2, 3, 4 we have entries. If you see the realization account, debit side is more. Debit side it is coming to 16,88,500. 16,88,500 minus these two amounts 55,000 and 11,25,000. It comes to 5,08,500. If the amount balancing where comes on the debit side means it's a profit. If it is coming on the credit side means it is a loss. How much? 5,08,500. This loss is to be transferred to the equity shareholders. Loss is to be transferred to the equity shareholders. So we are writing by equity shareholders. This is the balancing figure. Once realization account is prepared, you know that there is a loss. For this will pass the sixth entry. Loss is on the credit side, so realization account attached to credit side, no, so equity shareholders account attached to realization account for transferring the loss to the realization account. Okay, then after that equity shares are there 11,25,000. Okay, so this 11,25,000 is to be transferred to the equity shares by limited. 11,25,000 total shares are this much, no. This is to be transferred to the equity shareholders account. So we are writing entry equity shareholders account attached to equity shares in Y Limited company. Transferring 11,25,000 we have transferred. What else is there? That's all. Over. In the books of X Limited is over. Now when it comes to journal entries in the books of Y Limited, only 3 entries you will get. One is purchasing the company. Second one is transferring the assets and liabilities. Third one is purchase consideration, PC. Only 3 entries. First one, purchasing the company. Purchasing at what rate? You know that 11,20,000, 25,000 we have already calculated purchase consideration. When you are purchasing business purchase account attached to, from where we are purchasing? From liquidation of X Limited company. So it is 11,25,000 we have written. Then after that assets and liabilities taken over. Now you see the assets and liabilities here. First of all, assets of we are considering only X only because we are winding up X Limited. So all the assets debit side, sundry assets 16,85,000, cash in hand 3,500. Then after that liabilities, except shareholders, we can write all the liabilities like creditors 55,000 and then profit and loss account 11,25,000. This is related to the purchase consideration. Okay, and business purchases, no, profit and loss account 15,000, no? Yeah, it is 15,000. 1 minute. Profit, this is profit and loss account is 15,000. Business purchases is 11,25,000. So by mistake I have written. So you know that in the problem it is given purchase profit and loss account is 15,000 that we have written here. Okay, and business purchases, this is to be sent on the credit side. So business purchases 11,25,000. So debit side we have 2 amounts, credit side we have 3 amounts. Always second entry you have to balance it. If you see we are debit side is more, it comes to 16,88,500 minus these 3 amounts. You are getting a difference of 4,93,500. This is balancing figure. What do you say? General reserve. This is as per the merger method. Merger method means you have to Consider the balancing figure, whether it is a debit side or credit side, we say it as a general reserve only. Okay, so general reserve balancing figure, you got this much. This we are going to consider into the balance sheet. Remember this point. This is over. Next, after that, what? Purchase consideration. So this is in the books of transferee. Purchase consideration means they are paying. Purchase consideration amount is paying to whom? Liquidation of X limited company. Debit the receiver. How they are paying? Through the share capital, equity shares, right? So purchase consideration is this. Debit the receiver, credit what goes out. In that way, for being purchase consideration paid. In the books of X limited, Y limited, X limited, and in the books of Y limited. In both the books, we have written the journal entries. Now we'll come to the balance sheet. Balance sheet is also very simple. First, you can write the pro forma and underline the main important points. What do you write it on the balance sheet? First of all, equity and liability, shareholders first point. Under this, share capital, reserves and surplus. Second one is non-current liabilities, long-term borrowings. Third one, current liabilities. 3 points on the liability side. Then after that, asset side, we have only 2 points. One is non-current assets. Non-current assets, we can categorize it as tangible assets, intangible assets. Okay. Then after that, cash, and you can say it as a current liabilities. Under the current liabilities, it comes to whatever is given. First format we can prepare, then after that we can just fill the amounts. First thing is that here share capital. How do you got share capital? See, just focus. Share capital, actually the company, which company? X limited. So X limited is having share capital of 9,000, but now balance sheet is for the Y company. Who is he? Y company means transferee. Balance sheet in the books of Y means transferee. So share capital of Y's we have to see. Y share capital is how much here? 40,000 equity shares. 40,000 equity shares. And also he is paying as purchase consideration of 11,25,000 he is paying. But how many shares are there? 15,000 shares. 15,000 shares. So we are showing it as 55,000 equity shares. How do you got 55,000? 40,000 which is given in the book. Y's share capital is 40,000 plus purchase consideration. You know that 15,000 shares you got. 15,000 also he is paying through the share capital, and it means his share capital is increasing. Already 40 is there, plus when he is issuing extra 15,000, total it is coming to 55,000. How do you got 55? 40 plus 15,000. At the rate 75 rupees, you see 40,000 equity shares at the rate of 75 rupees they said, but 45 is, for 45 we are adding 15,000. So anyhow rate is 75 only. So it is 55,000 equity shares at the rate of 75 coming to 41,25,000. 41,25,000 we have written here. Clear? Share capital. Then reserves and surplus. Now reserves and surplus we are showing in note. Okay, note number 2. Reserves and surplus is here. Actual general reserve is how much? 12,85,000 it is. Okay, so general reserve is 12,80,000. Wise is 12,80,000. To that we are adding not this 4,03,000 we don't add, because as per the second entry, altogether how much general reserve we have means 4,93,500. This we are adding this. So total we are getting 17,78,500. Okay, and to that profit and loss account. Profit and loss account means what? Surplus. When it is given on the balance sheet asset side it is given. Asset side means it's profit. Surplus also we are adding reserves and surplus. Reserve is this much, surplus is profit and loss account. Both together we'll write now. 15,000 plus 35,000, 15 plus 35,000 is coming to 50,000. So altogether 18,28,500 is the reserves and surplus that we are writing here. Okay. Next, after writing the share capital, reserves and surplus, what do you write? Non-current liabilities, that is long-term borrowings. Long-term borrowings are given here? No, not given. So I kept it as a blank. Next, current liabilities. Current liabilities we have, you see the problem, only trade creditors are there, sundry creditors. Sundry creditors, we don't say it as sundry creditors, trade payable. So trade payable. Here onwards, everything will add and will show it in the balance sheet. Sundry creditors, how much? 55 plus 65. So showing in the point number 3, 55 plus 65, it is coming to 1,20,000. This is written. Liabilities are over. It is coming to 60,73,500. Now coming to asset side. Asset sides, what do you write first? Non-current assets, tangible assets. Tangible assets means here sundry assets we have. Sundry assets. How much? 43,500, 57,500 here. Yeah, 43,000, 57,500 plus 16,85,000. It is coming to 60,42,500. This is written here. Then after that, what else we have? Only cash in hand. Cash in hand comes under the column of cash and cash equivalents. So I kept a heading under current liability, cash and cash equivalents. Two amounts are there, 3,500 and 27,500. Total it is coming to 31 lakh. Total of this is also. Both the sides it is tallying. Means problem is correct. Very simple. Only the thing is you have to understand mainly the purchase consideration and journal entries how to write. Then while writing the journal entries, please be careful about realization account. After transactions of 5, no more realization entries. No more realization entries. There you can put a full stop and prepare the realization account. There you got a loss. For loss we have passed one entry. Okay, and transferring the liabilities to the realization of equity shares account, we have passed one entry. That's it, nothing else there. And in the books of Y Limited, we have passed only 3 entries. One is purchasing the company, means purchase consideration. Second one is transferring the assets and liabilities. Third one is for making purchase payment. And after that, we have prepared the balance sheet. Is clear, I think. Take a screenshot or note down. If you understood, next class onwards we'll see some more problems without journal entries. We'll try to work out, because journal entries you are clear, I think. This is not sufficient, whatever you are following from our channel. You have to work out more, take more problems, illustration problems, exercises. The more you work out, you get more confidence. Okay, stay connected. Don't forget to share these videos and practice well. Good luck.